Hey everyone, I just finished watching the conference by Central Bank Chief Jerome Powell where he highlighted that the central bank may be done raising rates for this economic cycle. And what that means is the question that becomes, when are they going to start cutting rates? And according to the central bankers' forecasts, it looks like sometime in 2024 they're going to start cutting interest rates. Typically, cutting interest rates has been good news for growth stocks. And so I suspect if it is true what the central bank is forecasting, 2024 could be an excellent year for growth stocks. Now, in this video, I'm going to highlight one growth stock that's down 91% off its high that I think makes for an excellent buy in 2024. Now, that growth stock is Fiverr. Fiverr International is the growth stock that I'm going to be talking about in this video. I'm going to look at its latest prospects, what it delivered so far in 2023, what I like about the business model and its business tailwinds, and I'm going to look at its demonstration of revenue growth and economies in scale. And finally, I'm going to show you the valuation and why the valuation is one of the main reasons I think Fiverr is an excellent stock to buy for 2024. So let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in the third quarter of 2023, Fiverr reported 92.5 million in revenue, which was up 12% year over year. Management was forecasting something like 5 to 8% revenue growth for the third quarter, and they outperformed that outlook. Now, active buyers on the platform decreased by 2% year over year. Still, they've got a solid 4.2 million active buyers on the Fiverr platform, but the spend per buyer increased by 4% to $271. More importantly, the take rate increased by 130 basis points to 31.3%. And given the significant increase in the take rate, it's understandable that Fiverr experienced a small decrease in active buyers. Think of the take rate as the price that sellers have to pay in order to offer their services. So Fiverr brings together those that offer services and those that want to buy services on its platform. And Fiverr takes a fee for each transaction on the platform. That's the take rate. So by increasing the take rate, Fiverr is essentially increasing the price of the platform. And whenever you increase price, you can expect to have a decrease in demand. And that's what happened here with Fiverr. Still, I like companies that take pricing action to demonstrate an improvement in profitability. And Fiverr did that, right? They increased their price and they demonstrated profitability, GAAP net income of $3 million. For several years, Fiverr had been losing money on the bottom line. Now that the cost of capital has increased, Fiverr has taken to focusing on profitability, and that should be good news for investors. For the fourth quarter, Fiverr is expecting a wide range of revenue growth between 6 to 14% for the fourth quarter, revenue between 88 million and 95 million. And that would mean for the year, it would bring in revenue growth between 6 to 8%. That would be better than Fiverr thought to start the year, and that would be an acceleration as the year went on. Fiverr did better in terms of revenue growth. I will highlight here that beginning 2023, there was a big risk that artificial intelligence was going to meaningfully hurt Fiverr's business. I've been one that since the beginning said that I don't think it's going to meaningfully hurt Fiverr's business. I was under the impression that the way the services segment works here on the Fiverr platform, that it will be a meaningful impact on the business overall. It will help some providers of services and it will hurt others. It will help those that incorporate AI into the services that they offer, but it'll hurt those who are not using AI to help the services that they offer, right? Some people on Fiverr offer services where they help creators make YouTube thumbnails, right? If they use AI to make their thumbnails more quickly and take less time to create those thumbnails, then they can sell their services at a lower price, or they can offer more quantity of their service in a given day, and therefore increase their productivity and increase demand on the platform overall if they were to incorporate AI. However, those that don't are going to be at a competitive disadvantage because there's going to be others that will. And that's the kind of theme that I have been speaking of with Fiverr for 2023. And that's kind of what management has also said, that artificial intelligence is not going to meaningfully hurt the business. In fact, it might be a net positive for the business. So that was a big risk that rose for Fiverr to start the year. And now it seems like most of that risk has played out, although it's not completely for sure that Fiverr is not going to be hurt with AI. Artificial intelligence has the potential for hurting and helping many businesses around the world. It's still in the very early stages, so it's still too early to determine if Fiverr is going to be one of those businesses that is helped or hurt by artificial intelligence, but it does raise the risk. It does raise the risk for this stock, to be sure. I acknowledge that, and I'm incorporating that in my recommendation here for Fiverr stock. I mentioned already that Fiverr stock is down 91% off its high it reached around 2021. Most of that decrease came in 2021 and 2022. The stock has been relatively flat here in 2023. In fact, we can look at a year-to-date chart and you could see that it had been mostly flat here for 2023, although in the middle of the year it took a decline, and while that had been happening, it did rebound off the lows of being down 60%, now closer to 40%. So I guess it hasn't been flat, but when you look at the greater picture, most of the losses, the decline in the stock price, happened in 2021 and 2022. I will say Fiverr, I have rated Fiverr stock as one of my top stocks to buy throughout 2023. So it has not been one of my better performers for the year, although I have made better recommendations like Meta Platforms, Mercado Libre, Alphabet, Nvidia, and others that I've recommended as buys have performed really, really well. Fiverr has been one of those stocks that has not performed well for me in 2023. I mentioned the company's growing nicely, and I suspect this growth rate will continue. 353 million in trailing 12-month revenue, and that's up from less than 100 million in revenue in 2019. I suspect this will continue because it's so much more convenient to hire people for specific tasks than to hire people full-time or part-time, right? If I need some services done for my business, I have several small businesses that I'm operating. For instance, if I wanted to hire somebody to do my thumbnails, which I don't, but if I wanted to, I could go onto the Fiverr platform and hire somebody to do my thumbnails for me so that I don't have to take the time to do the thumbnails myself. I don't want to, but if I did, I could do that, and that would be a lot more convenient for me instead of hiring somebody part-time or full-time to do these kinds of tasks in-house. And when demand decreases, or when I increase production or decrease production, it would be easier to increase hiring out or lowering for services. Now think of that for businesses and the millions of businesses around the world, how much more convenience it adds to have a platform like Fiverr available where you can buy and sell services that you need without needing to hire an individual part-time or full-time. At least temporarily, it helps you fill the gap of the services needed. And if you know for sure your business has increased meaningfully enough where you need to hire somebody, then you could go ahead and hire full-time. Now, Fiverr is not the only platform that does this. There's also Upstart that does this, or Upwork. I'm sorry if I'm forgetting the proper name for those. I get those two companies confused. Upstart is a lending company. Upwork is a company that has the platform similar to Fiverr, which offers services you can buy and sell. So it's not Fiverr alone in this market, but the market overall should increase because of that convenience, the tailwind that it adds to entrepreneurs worldwide. I mentioned already that we would talk about economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. And Fiverr definitely has been one that demonstrated what we just talked about, a growth in revenue that's led to an increase in profitability. Look at this increase in operating profit margin from negative 45% all the way to negative 4.45%. And I wouldn't be surprised if this number turns positive in 2024, given the trends in Fiverr's business. Similarly, cash flow from operations has demonstrated very nice growth, rising from negative 40 million all the way up to 65 million in the most recent trailing 12 months. The balance sheet also looks good for Fiverr. The company has 454 million in long-term debt and 398 million in cash and short-term investments. So net it has about 60 million in debt. It has a solid balance sheet, especially given the strong and positive cash flow from operations. Long-term debt and the debt issue is not a problem for Fiverr International. And finally, I highlighted that I would discuss why valuation is one reason I really like Fiverr stock. After that big drawdown in share price, Fiverr is trading at a price to free cash flow of 17 and a price to earnings forward it's trading, price to free cash flow of 17 and a PE forward of 12.17. That's a cheap valuation for really any company, but especially for a company that's demonstrating the phenomenal growth in earnings per share and in cash flow that I showed you with Fiverr. But let's take another look at that growth in earnings and cash flow. Here I have Fiverr's results for the 3 months ended September 30th and the 9 months ended September 30th. And you can see net income increased to 3 million. That was an improvement from a loss of 11.3 million in the same quarter the prior year. And for the 9 months ended September 30th, the net loss improved to just 1 million, and this was down from a net loss of 70 million. That's significant improvement in profitability. Similarly, Fiverr's cash flow from operations improved to 23.4 million in the most recent quarter, up from 5.7 million in the same quarter the prior year. And in the 9 months, it increased to 55.6 million, up from 20 million in the same time the prior year. So cash flow from operations nearly tripled in the 9 months ended September 30th and nearly 4x'd in the 3 months ended September 30th. So Fiverr is one of those rare companies where the valuation has fallen significantly while the performance is improving meaningfully, right? You're seeing the stock price coming down while you're seeing earnings and cash flow going up. I love those kinds of situations. That's what I look for, and that's why I'm recommending Fiverr International stock as one excellent growth stock you can buy hand over fist for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.